Investo has announced the launch of a new fund focusing on the metaverse. The fund is expected to invest in small and mid-cap firms operating in the immersive virtual world space. The fund will target companies across the globe, with a particular focus on Europe, Asia, and the United States. It will be managed by Tony Roberts and James McDermott Rowe. The fund will target companies that create and deliver products and services for the metaverse. The objective of the new fund is to capture the opportunities within the metaverse, which could be worth up to $8 trillion. The fund is aiming to invest in companies that are involved in the metaverse ecosystem and are expected to outperform the global market in the long run. According to Citi, the metaverse market is expected to be worth $13 trillion by 2030. The fund is currently open for investors. It has already raised $3.5 million. HSBC has launched a new discretionary portfolio that focuses on investments in the metaverse. The metaverse is an online virtual environment that users can explore, play games, socialize, work, and more. Those interested in the metaverse will be able to access the metaverse via various devices. This new portfolio will be available to high-net-worth clients in Hong Kong and Asia. The company plans to focus its fund on interface, computing, virtualization, experience, and infrastructure in the virtual world known as the metaverse. The bank recently purchased a plot of land in the Sandbox Metaverse, which is a popular virtual gaming environment for esports fans. It's not the first bank to venture into this sector, with JP Morgan Chase & Company becoming the first global bank to do so last month. The bank also invested in blockchain-based Decentraland. The strategy's first investment strategy will focus on 5 key areas of the metaverse ecosystem: virtualization, infrastructure, compute, and experience and discovery. HSBC will focus on these areas with the aim of increasing its global presence in the industry. It's a big step for the bank, which has been aiming to be Asia's largest wealth manager by 2025. Meanwhile, UBS and Credit Suisse have been boosting headcounts in Asia as the region mints more billionaires and millionaires. HSBC has previously remained a skeptic of cryptocurrencies such as Bitcoin. In a recent interview with the Financial Times, HSBC's CEO, Lena Lim, discussed the blockchain ecosystem. The bank plans to use the platform to focus on financial literacy and co-create educational experiences with partners such as sports teams. They also plan to work with sports organizations to create educational experiences that will benefit their young clients. HSBC has launched a new sustainable equity fund focused on Asia-Pacific companies. This fund aims to provide exposure to companies that manage their stakeholders well and generate superior returns on investment capital. It also looks for companies that contribute to the prosperity of communities and create positive stakeholder relations. It will invest in quality mid-sized firms with a sustainable business model. It is part of a global investment strategy that includes a broad range of sustainable investment objectives. The HSBC Asset Management Unit has also launched an Asian-based ESG bond fund. The new fund, called the HSBC GIF Asia ESG Bond Fund, will invest in Asian companies with strong ESG credentials. The fund aims to achieve a higher ESG score and lower carbon intensity, according to the company. HSBC Asset Management has set a minimum investment of 1,099 Hong Kong dollars to invest in the fund. HSBC has announced the launch of a $100 million initiative to build a net zero global economy. The fund will support sustainable projects and address the gaps in measurement, demand, and business cases. The fund will target startup companies that are developing carbon-cutting technologies, biodiversity protection projects, and energy transition initiatives in Asia. HSBC will also focus on projects that improve access to clean energy, such as wind and solar power, and initiatives that promote sustainable development. HSBC is committed to sustainable development and is a leader in sustainable finance. It is the global finance provider for cities, providing personal banking services to millions of city citizens. The new fund will focus on sustainable infrastructure projects to develop net zero cities. HSBC has decades of experience in urban development projects and will leverage these capabilities to create a green financing solution for cities and companies. If successful, HSBC will help make the financial system more inclusive and resilient. The Investo Metaverse Fund will invest in companies across the globe. This new fund focuses on companies that benefit from and facilitate immersive virtual worlds. The goal of the fund is to invest in large, medium and small cap companies that offer these experiences. The company's projections show that there will be about 1 billion users of the metaverse by the end of 2022. The Investo Metaverse Fund will invest in companies in areas such as blockchain, immersive platforms, and devices that allow people to access the metaverse. The fund is open to investors in the United Kingdom and other countries. As of June 30th, it managed $1.4 trillion in assets. This is a relatively low amount for a metaverse fund. However, it could be a good option for a long-term investor. The mid-cap category consists of young and mid-cap companies. The growth of these companies will be reflected in their earnings. These companies are often more stable than their large-cap counterparts. In addition, mid-caps tend to have more growth potential than large caps. Despite the recent volatility, the mid-cap sector is likely to see better returns than its big-cap peers in the near future. The Investo Metaverse Fund will invest in companies of all sizes. The fund's benchmark is the S&P Mid-Cap 400 Dividend Aristocrats Index and the Russell 2000 Dividend Growth Index. Both indexes have achieved impressive upside/downside capture ratios since their inception. This fund will also invest in high-quality small-cap companies.